Hi everybody and welcome back to my channel. If you caught my video on Tuesday, you'll know that I just got back from a road trip. So I've taken it a little bit easy this week. I'm still in my trade from my road trip over a week ago now. I'm still in my swing trade where I'm long pound dollar. So I've not actually traded my account with the 5%ers. So I've spent some time this week back testing, going over some records and just basically getting back into the swing of things. And I realised before I did this video that you guys have been asking a lot of questions and I love getting all the comments from you. I try to get back to as many as I can and answer your questions, but there's quite a few questions that I've not answered in detail, and that's what I thought I'd do on this Q&A video today. So grab yourselves a cup of tea or a coffee and join me for some Q&A time. So first question here from Rachel a few days ago. I love your videos and it's been fab watching your journey. Are you able to explain a little bit more detail about paying the broker and how that money is taken from the balance? It's something that many content creators do not discuss and it's something that's often skipped over when looking at the basics. So first of all, to answer your question, it obviously depends on what broker that you go with because there's loads of different brokers out there that you can use for trading. So to answer your question, I'm going to just refer to my own experience trading Forex. And the broker that I'm with, that I started with at the beginning, is Owanda. Now the reason I chose Owanda is quite a few reasons really, but one of the main ones is that they don't actually charge any fees for using their platform. So since I joined Owanda over a year ago, I haven't paid them anything. I've not paid for commissions because they take their profit out of the difference in the spread when I place my trades. They don't charge any swap fees, and I haven't actually been charged any kind of account fees either. So it's one of the reasons I've gone with them, because I think it helps to really manage the risk at the beginning, especially if you have a small account, just to keep costs low, to provide a safe platform. The only thing I'm aware about with Owanda is that they can charge an inactivity fee, but I think that's if you don't trade at all with your account for about a year off the top of my head. But as long as you keep your account active, you shouldn't have any fees to worry about from Owanda. Now, I've not got a lot of experience with other brokers, but from what I've learnt about, from what I've read or watched online, I think a lot of the fees actually come out of your account balance. So let's say that you have £1,000 account, and if you're trading that account and you have commissions come in, I think they'll just take it out of the actual account balance. That's usually the way that they are processing their fees. Another question here, another Rachel, maybe the same Rachel, I don't know. But you're basically asking about taxes, about capital gains taxes. And before I go into detail on this, just for the record guys, I'm not an accountant, I'm not a financial advisor, and by all means, my opinion when it comes to calculating taxes is to get an accountant or seek professional financial advice from somebody who's actually qualified to give that. But for my own personal research into the topic, and I have spent some time researching online, this is obviously based on where I am in the UK, so if you're in a different country, it's probably going to be different for you. But if you're in the UK, from my understanding from the research that I've done on DirectGov and various different bodies and websites, as traders, it's such a complex line because some people believe that if you are spread betting, essentially gambling, that you don't need to pay taxes. But from the research that I've done, it's basically saying that if you are following a plan, if you have a structure, if you're consistently making profits, then it's taxable. And there's also two ways to go about it, because it depends if you are trading your personal account or if you are trading with a funded proprietary firm like the 5%ers or FTMO. If you're trading with a prop firm, then generally you are being used as a subcontractor, which means that the prop firm are hiring your services to trade and you will generally have to invoice them to get your profit share. Now this method of trading is definitely taxable, and my advice would just be to keep track of all your accounts for that tax year. Keep your accounts books. It's fairly simple to do, I'd imagine, because you can just print off your broker statements, or if you're using a prop firm, you can just keep track of all the invoices that you're using to send to them, so that at the end of the year, you can either send that to an accountant, a bookkeeper, or you can work it out yourselves, work out, your incomings, your outgoings, and work out the tax that's payable on the net of that. But if you're at the beginning of your trading journey, you might not even be making enough to pay tax on anyway, so it might not be much of a concern for you yet. I've not actually done that yet because I've not made enough to pay tax on either. When I am in that position, I'll definitely share another video with an update on how I'm dealing with tax as a trader. I do receive quite a few questions asking to recommend some books, and I was going to do that in a separate video to go into a little bit more detail, but just to very briefly answer that, here's some really great books for you guys that I've read that I recommend. Anything from Mark Douglas, who is excellent at talking about trading psychology. So he's done books such as Trading in the Zone or The Disciplined Trader. He's also done a 4-part video series on YouTube that I highly recommend. They work out around about 4 hours long, but they're just really, really useful stuff and probably worth repeating them as well because it's just always good stuff to confirm. I also recommend the Candlestick Trading Bible, which I think you can pretty much get a Kindle download quite cheap from Amazon, but it's really, really useful. It's not that long a book, it's only about 150 pages or something like that, but it just talks and goes into detail on the technicals. It keeps it quite simple, and it's talking about the candlesticks, it's talking about candlestick patterns, and it's talking about ways to read price action, but it's quite a good beginner's guide into that. And sometimes, you know, keep it simple, it's all you need to be able to get trading. Another book that I recommend, which is a lot more in-depth on technical analysis, and that's called The Art and Science of Technical Analysis. Now, it's quite a big book and it really does go in depth on technical analysis, so it's a great one to add to your trading collection. Also, a book I've just finished reading, it's a little bit different going away from trading, but it's called The Richest Man in Babylon, and it's just quite an interesting context, really talking about more investment and personal development. I'd definitely recommend that for some summer reading. Common question that I get from a lot of subscribers is where to start trading, and that, you can imagine, you can answer that with a lot of different things, but all I'm going to say for now in this Q&A is definitely check out babypips.com, because they're a really useful website. They've got a free online course for Forex, so if you're a complete beginner, it's a brilliant place to start. You don't have to spend any money, and it just gives you all the foundations and everything that you need to know to get started, basically. So definitely check that out. That's babypips.com. Question here from Patrick says, now that you've been trading Forex for a while, how does Forex compare to the way that you learned day trading with warrior trading? It's a really good question. And to be honest, I find that Forex is a totally different ballgame to trading stocks with warrior trading. Now, I'm not saying it's totally different to trading stocks, but warrior trading had their own ways of teaching, and a lot of the stuff they were teaching didn't focus on risk management, and it focused on a very particular breakout strategy, which is very different to what I've been learning and doing with Forex. So, two different things there. The Forex markets move differently, and I'm certainly still learning and developing and growing with that, but I'm definitely enjoying trading Forex and the ability to really manage risk. And I like how flexible it is as well, because it is 24 hours a day, 5 days a week. A video here from Steve. I don't know if you're watching this, Steve, but you've just asked basically about how to draw trend lines, and that really depends on what platform you're using, but it's pretty straightforward, so I'll just show you really quickly now on the computer. So I'll just load across a chart. Let's have a quick look. Simple chart here for Australian dollar, Canadian dollar, and I'm just going to redraw this trend line just to show you. So this is TradingView. I'll add a link so you can check them out. I use the paid version of TradingView, but they do offer a free version as well. So if you don't want to pay, that's fine. Check out their free version and you can use that to draw the trend lines with me now. So if I come out of full screen mode so that you can see, on the left hand side here we've got a big panel of drawing tools, and the second one down here, if it's not highlighted, you can click on the arrow to the right and make sure you choose trend line. And then all you're doing basically is finding a point. So with trend lines, you're looking for swings in the market, significant candlestick points that are going to match up and, you know, form your trend line. So from here, I choose this one at the bottom because it's the lowest part of the swing. And looking at this wedge here, basically I'm interested in these 2 points. This point here where price has come down and swung up. It's made a new high here, it's come down, and it's made another point here, another swing, a lower swing there, and it's basically just matching them up. Now, a lot of people have a lot of different thoughts when it comes to trend lines. Some people say that you need at least 3 touches of candlesticks on your trend line. Some say you need 2. Some people say that a trend line has to touch just the wicks, and others say it's just the bodies. But from my point of view, as long as the trend line is touching price and showing you the direction of the trend, then it's going to work as its purpose as a trend line. So I hope that helps. Just checking the time, I think this video might be getting long, so I'll just answer a couple more questions before I wrap it up. So another question here is asking why I've chosen to live on a boat and what the story there is. Now, before I answer that, I definitely need to have a sip of my brew. So this is actually the second narrowboat that I've lived on. When I met my husband, who was my boyfriend at the time, he lived on his parents' narrowboat. He just come out of university and he was looking after it for them. So I basically moved onto the boat with him and we lived on the boat for a couple of years. So I kind of got a taste of what it was like back then, which was about 10 years ago now. And cutting a very long story short, which involves a lot of house moves, a lot of travelling around, and I got to a point where, quite honestly, we were missing the pace of life on a boat. Has a lot of advantages to it, as I'm sure you can imagine, and it's very cheap to live as well, so it just helps us to be able to really save a lot of money, which is what we're doing at the minute, being on the boat. And you know, why not? It's a pretty cool way to live. Interesting question here from Eric, who is asking me about account sizes. Eric's saying, can you elaborate on big accounts versus small accounts, approximate capital requirements, etc., how you can get around with that with margin? And to answer your question to my best ability with the knowledge I have at the moment recording this video, and that is that when I traded stocks or warrior trading, personally my mindset was very different. It was focusing on how to make money quickly, how to win. And I started with about $2,000. I was taking like 10% risk per trade, which is very poor risk management and I wouldn't recommend it. And it didn't end very well. And what I've learned since I've shifted and since I've been focusing on trading Forex is to really focus on managing risk on the account, to concentrate on how not to lose. Because the more time that you spend on that, you'll be able to grow your experience, grow your learning, whilst minimizing losses so that you don't lose as much money, and before you know it, the winners will start taking care of themselves. Now to do that, that's up to you really as to how much money you've got, but from my opinion, entering trading with any pressure to need to make money straight away, to need to make money to pay for bills or, I don't know, buy expensive cars, it's just not the way, in my opinion, to enter trading the markets, because you're entering with a lot of pressure and there's a lot of greed and desire there and need to make money, which isn't always the best way to foster the right mindset that's needed to trade effectively. I've had to learn that the hard way, so you're just going to have to trust me on that. So my advice when it comes to account size would be that you can pretty much start trading with a small account, if that's what you have, and use that as a base to grow your experience, your knowledge, your data. So for example, I started with £500 trading Forex, and I think that's worked out really well because it's taught me a lot, and I've been using very small lot sizes, so I'm not really risking a lot. I'm not making a lot with that, I'm not risking a lot, so I'm not losing a lot, but it's allowing me a place to grow, to build up experience and to build trade data. Now when you get to a point where you've got months worth of positive data where you are consistently profitable, then you can start adding to that account if you choose to try to increase your profits. And from my opinion, that's a healthy way to grow your account, is trading it, making sure you're consistently profitable first, and then continuing to trade it, and then maybe each month adding some money as well to your account to just speed up the growth process. But there's loads of different options of trading, and each to their own, but that's just my opinion, is to focus on a very low risk method for trading. So I'm going to leave it there for this video, guys. I hope that you've enjoyed it, something a little bit different. If you've got any other questions or any comments in general, be sure to leave them below. If you've enjoyed the video, hit the like button. Don't forget to subscribe, and I'll catch you in my next video. Have a great weekend. Bye, guys.